All right, everybody. Hey, Dan Fitzpatrick here, stock market mentor. Yeah, you probably knew that already. So I want to look at the big three that reported earnings after the bell today. First, just kind of a general overview. The S&P at one point today was up above 7,000, like barely by 2 points. So that's like a new high, but it's also given us a sense that maybe we're going to continue higher. We'll really see tomorrow how the market reacts. So like right now, the Qs, the NASDAQ 100 ETF are up 0.75%. In the regular hours, they're just out up 0.33. So these earnings reports have definitely buoyed the market a little bit as far as what's going on tomorrow. This is the post earnings run. Not a big deal, but it's indicative. I'm caring less about what the actual number is and more just about what the chart looks like. So we've got Meta, Tesla, and Microsoft that reported earnings after the bell. And so what I tend to do if I'm thinking about trading these things, either prior to earnings release or the next day, is I will look for the implied move, and that is just the move that the options market is pricing in for these stocks, like the highest and the lowest, like what's the implied move, how many bucks, that kind of thing. And so I went before I did this, before I'm doing this video here, is I went and marked these all out. And the yellow box here shows what the options market implied the maximum upside move to be, which is right around 711, something like that. And these aren't perfect, but they're almost dead balls on. And then on the downside to 625. And so the idea is, and the options expire on Friday, so just in a couple more trading days. And the idea is that the market, excuse me, the options market is anticipating that the stock will basically close inside this range on Friday afternoon. It doesn't mean that the stock's going to stay in this range, but it means that that's really where the stock's likely to gravitate to, is back into this yellow box someplace. And so, like, this is what this looked like before Meta reported earnings. So you can see any implied move. It doesn't say, oh, it can go up by 18 bucks, but down by 4. No, it just gives you one number and says, in this case, the implied move is $43 on Meta. That's what the implied move was. And so that says that the upside from where the stock is now is up to 711. So that's what the implied move is on Meta. Again, this is before earnings, up to 711, and that $43 subtracted from that price of the stock, again prior to earnings, prior to the close. The downside move is 625. So the options market says, hey man, no matter what this thing's doing, it's going to go between here and down here. And so what does the stock actually do? It basically, this is known as the flip the bird at the options market trade. The stock goes way up above the implied move, what the move implies. And a lot of times with this kind of thing, it'll just keep going tomorrow. I don't know for sure, but nobody does. But just know that the stock is supposed to fall back here. Now, this is what's important, and I'm not making a market call, because only an idiot would make a market call. You just don't know what the stock's going to do, but just kind of anticipating certain things. If the stock continues higher, then everybody betting on this implied move, and that's a pretty big market in Meta, which traded over 31 million shares. Everybody that bet on this implied move being correct is going to be scrambling. And so we could see this stock continue to run higher. Now, one of the little jokes, it's not really a joke, but it kind of is. I have to say that it is, that I say all the time with Meta is that you never want to bet against a sociopath. That's kind of been the running joke as long as Mark Zuckerberg's been labeled by me as a sociopath. And that runs on about 20 years. And so, sooner or later, man, the guy's going to, and he's brilliant as hell, obviously. So sooner or later, the guy's going to figure out a way to get this stock jacked up. And that's definitely what's happening here. So I think their guidance and all that stuff was really, really solid, really, really good. And so I think we can see this stock moving. We can move it. We can see it moving significantly higher. I mean, their earnings were $8.88. That's pretty good. That's up 11% from the year prior. The projections were for 821. And so that's a nice thing. Sales increased 24% and were like about $1.5 billion ahead of analyst estimates. And so this is all really good stuff. And the guidance, and this is what people really care about, the guidance was also higher. And so what we've got is like a 33.5% year over year revenue growth as far as what the market's looking for. Guys, that's massive numbers. It's massive numbers. And so they're also, and this is one of the most important things, is what is CapEx? What's the capital expenditure going to be? These days, investors want to see a lot of capital expenditures, particularly in the AI space. That's the big, sexy deal now. As a lot of you guys know, my sexy AI deal has to do with memory chips and storage, not all the stuff that everybody gets all hot about. But anyway, so with their CapEx expenditures, they're going to be between, they say, this is kind of a big spread, between 115 and 135 billion. So, only maybe 20 billion, give or take, between the low and the high. And that's a lot more than what the analysts were projecting, which was just a little over 110 billion. So basically, Meta had just absolutely crushed it. And that's why the stock is up almost 9% and well above the implied move. So you'll have to see how this trades tomorrow, but hopefully this has kind of given you a little bit of insight. Now, Tesla, they reported earnings. Their implied move wasn't as big. It was $25. And so that would take it up here on the upside and here on the downside. And what we're seeing is kind of a whole lot of nothing. And so I don't really feel like there's an edge one way or another in this. It's just important for you to see how the options market is implying this. And then finally, Mr. Softy, Microsoft, in the regular hours was actually up a bit and up above the 50-day moving average. Now, this thing has been a mess for a while since this double top. And then when it fell down below this last real key number of 500, it just really been struggling. Lower lows, lower highs, lower low, lower high, lower low. Now we're back up here, right? And then the implied move on this was another $25 to 503. On the upside, I just say 500, and then on the downside 453, down around there. So this is what the options market is saying the stock's going to be trading in between now and next Friday, give or take, but ultimately closing in this range. I'm going to leave these boxes open over the next few days. We'll see if the options market is correct on this. But what we see is the company reports earnings and it absolutely tanks. It's down almost 5%. But notice at one point, this thing was clear down here, like well below the implied move, but it virtually immediately reverses and it comes back within this area. So this is the type of thing. I mean, I can kind of use Microsoft as the best example here. This is the type of thing where if you're a nimble trader and you like trading after hours and stuff like that, you can look at these implied moves. And in this case, like when the stock falls way below the implied move, your bias is that not the prediction, but your bias is, you know what, this stock's going to kind of probably do a little rubber band snap and come back the other way. And so then what you'll do is, like you wait, this is a 5 minute chart. I might as well go ahead and use a 1 minute chart. Yeah. So this is what you do. Like you see this stock going, and this is where the implied move was, clear up to 485. So you see the stock coming down 445, well below where the implied move was saying it was. And then you literally just like wait for the first. This is a pro tip here. You wait for like the first green open bar like this, and then you say, all right, if it, just looking at this, if it closes, if it runs above 450, that gives me the sense that we really truly have a 3 candle reversal pattern here. I'm going to set my stop just a little bit below this last low here of 442.56. And I mean, set it at 442.55. The whole idea is that this stock is done going down, and now it's working on coming back up to the implied move box. And so then you're buying the stock here, and the stock is giving you a nice post-market trade. And so now this is where the box is right now. So this is my bet. Tomorrow, you're probably going to see the stock trade back within this range and just stay here. Okay. So anyway, that's all I've got for you in this free video. Members, if you are a veteran of the 59-minute trader, I'll say if you are a graduate, so to speak, of the 59-minute trader, you can trade with me live on Friday morning. I'll be opening up the doors about 6 o'clock Pacific, maybe even a little before then, because I want to go over some things with you, and I want to do it pre-market as opposed to while there's money-making opportunities. But if you've taken the 59-minute trader, then you can get in on that, and I plan on freaking making a lot of money, to tell you the truth. So if this interests you, I don't have a link for you or anything like that. It's kind of not in my area, but you can email Karen at stockmarketmentor.com, and she can give you more information on that. We've got quite a few people coming, so I think it's going to be a lot of fun. Anyway, and that gives us a chance to trade some of these storage stocks that are reporting earnings. So it's going to be a blast. I hope to see you there. And if I don't, that's okay, because I'll see you somewhere.